Hello my good traders. Today I have a video for you about how you can set up a risk-free trade. A risk-free trade. I've had a lot of people asking me this question every day, every time. Now, setting up a risk-free trade involves a lot of things, and I'm going to take my time to explain in this video. Now, if you look at this trade, for instance, AUD USD, it is a risk-free trade that I have taken, and I'm going to explain why I am saying that. Now, if you look at it, this is a live account. Let me show you that. This is a real account, XNES Real 6. That is the server name. You can see it. The account name is Best Multimedia. That is my company, my small company account. Now, this account, I have just some little money in it, which is just $100. You can see the account balance is $103 as the main account balance. Okay, now this account, I target daily $100 profit on daily. Okay, that is what I target for this account. If you look at today's profit so far, today I have made so far $77 as profit. Out of $77, I have withdrawn $70 already. And so if you take $70 out of 77, it's just left with this, which is the 7.54. Now, these are the trades I have taken for today. If you look at the dates, I am sure you will know that it is all today. Today is Thursday, 8th of June, 2023. So all these trades are today's trades, which has given me the profit I'm showing you. Now, how did I make the withdrawal? I made a withdrawal. The first withdrawal of $20, the second withdrawal of $50, making up the $70 you are seeing over here. Fine, that is not the issue. That is not what we are looking at. The question remains, how can you set up a risk-free trade? Now, I still have two trades that are running, because I told you I'm looking for a daily profit of $100. I've gotten 77. Now I have about $47 running. If I should close these trades right now, I'll be getting, or I will even exceed my daily target of the $100. Now, I want to explain this before, if the need be to close, I close. But I see this trade having an opportunity to go more to the upside, because the trades that I have taken, if you look at it from here, they are all buy trades. As you can see, they are all buy trades, and you can see the lot size that I have used. Don't try this lot size if you don't have a good Forex strategy, because you end up blowing your account. Okay, if you don't have a good strategy, never try this lot size. And this is a scalping strategy I'm using for this $100 account. So if you don't have a good strategy, don't try. You end up losing big. Don't say I didn't warn you. All right, now you can see my lot size. The trades are all buy trades, AUD USD buy trades. Now the profit is about $51. Let's go back to the chart here, and then let me show you something. If I come back here, you see that the trade is still running to the upside, and I haven't closed yet. Now let me zoom out well so that you see what I mean by a risk-free trade. If you look at this trade, it is a risk-free trade because I am not afraid if the trade should come back against me. I am in a buy, but I am not afraid if the trade should come back against me. Why? Because I have moved my stop loss into profit. My stop loss is now into profit. Now, because this is a buy trade, if you look here, you see the buy, and this dotted green line are the entry points. Those are the entry points that I took the buy trade. Now, if you look above, you will see that there's some red line above, which is this one. That is my stop loss. My stop loss is above my entry because it is a buy trade. So I have moved my stop loss into profit. So even if this trade should come back against me, it will come and hit this red line, and then the two trades I have will close automatically. The trade will never come to this green dotted lines for me to be in loss. The trade will get closed up above there at the red line. So it means that no matter what happens, this trade, I am going to come out of this trade with some profit because I have locked up my trade in profit. That is what is meant by risk-free trade. And that is what's also what is meant by trailing stop. There are people who do what we call trailing stop. And trailing stop simply means that now you can see how the profit is going. I'm sure I'm in more profit now. That is the same $50 now. Trailing stop simply means that you are trying to move your stop loss into entry. That is after the trade has gone your direction. After the trade has gone your direction, then you move the stop loss into profit. So if it is a buy, it means you are going to move your stop loss up above the entry. If it is a buy trade, you move the stop loss up above the entry. If it is a sell trade, you move the stop loss below your entry. I repeat, if it is a buy trade, you move your stop loss above the entry like I have done here. And if it is a sell trade, you will move your stop loss below the entry, somewhere below here. Any of these areas could be where you move your stop loss into profit. That is what we call trailing stop, or trading a risk-free trade, or having a risk-free trade. Now, how do you do this? When you come to the trade, for you to do this, you will go to the trade where the trades are running. Okay, let me quickly do that. You go to where the trades are running. Now the trades are running $54 profit. So to be able to do that, you will tap on each of the trades. Each of the trades you are seeing here, you tap on each of them. Okay. When you tap on each of them, there will be a pop-up, or you click and hold on each of the trades. So when you tap and you hold here, or you hold the next one, you tap and hold the next one, there will be a pop-up. So let's do it together. I tap and hold, you see the pop-up will come. Now the pop-up says close order, new order, modify order, and then chart. Your interest is not in the close order. The close order is when you want to close the trade. The new order is when you want to place a similar trade on the same currency pair. And the modified trade is what our interest is. And if you click on chart, it will take you back to the chart. But our interest is in the modify order. So you click on the modify order. So in our case, we'll click on modify order. Now, when you click on modify order, this is what comes. When we get to this point, you have two areas to watch. The first area to watch is up here, to where the arrow is pointing at. You will see that modify order, the quote of the order is there, and you will see below it buy 0.10 AUD USD at the price at which you bought is there. And that is the most important thing that you are looking for, this price here. That is what you are looking at. That is the price at which you bought. That is the price at which you bought, which is 0.66843. So you bought at 0.66843. So if you are moving your profit above this quote, then you can choose to make your stop loss a bit higher than this price. So if you look at you see that my stop loss is 0.66865. The entry is 66843. So there's a difference of 2 pips. My stop loss and my entry has a difference of 2 pips. So it means I have moved the stop loss above the entry. I have moved the stop loss above the entry. So you see over here that my stop loss is a little bit 2 pips above the entry price over here. And then once that is done, you click on the modifier sign that is below here, and then it will modify. There are others who will want to move their stop loss into entry. If you want to move your stop loss into entry, then it means that you will pick the same price here as your stop loss. That one, it means that you have moved your stop loss into entry. The entry point is now your stop loss. So that one, what it means is that if the trade should even come back, it will close you out of the market at the exact entry point that you entered. So you may not make any profit on it, and you may also not lose anything on it, unless the brokers swap or spread, depending on how long your trade has been. If your trade has been on the market for more than a day, your broker may charge you for swap in addition to spread. So if you move your trade to entry, you may only pay for the swap fee and then maybe the spread. That is the only two you may pay for, which will be a small deduction from your account. But if you move your trade, your stop loss into profit, it is likely you are not going to make any loss, but you will make some profit. Okay, now let's do it practically so that you understand. So I'm going to clear this that you are seeing over there. I want to clear the stop loss, so I'm clearing it. Once I don't need it again, I'll just clear everything. It becomes 000. Then I click on modify. But I want us to put our stop loss at entry. So we are going to look at the entry price over here, and then we'll put the same figures over here at the stop loss area. So the stop loss area is the area with the red line. So let's do that. So what is our stop loss? Because we want to put our stop loss at entry. So our stop loss is going to be the entry is 0.66843. Once that is done, it means now our stop loss is now at entry price. Then we can click on modify. Now the trade has modified. If I go back, you will see that, go to the chart, you see that my stop loss, the red lines are now 2. Now the second red line below here is the entry price for the second trade. And now I have moved the stop loss to that entry price. That is why the entry price has also become red. It means now my stop loss is now at entry. And then the first trade I took, which is the dotted green line here, is still having the stop loss here above the entry. So if I want to move that one to come to entry, then I'll go and click on that trade too. I come back to the area here. I click and hold. I go to modify order. Then I will change the stop loss here to the entry price, which is above there, which is 0.66843. Okay, I think I have done, that is the trade we just did. So that will be the one at the top. So click on modify. Yes, so this is the one. So I'll clear this one. Then I'll choose 0.66836. Then I modify. Now you will see that if I come back, you see that now the two entry prices have all become red. They have all become red. What it means is that now my stop loss are now at the various entries. They are now at the various entry points. So even if this trade should come back against me, it is going to close me at the entry price that I entered, which is also risk free, but it may come with maybe swap charge, or I hope you understand, it may come with swap charge or spread, because every broker will charge you spread. So that is maybe the only small money you will pay, but your two trades are now at entry. It is also risk free, but moving your trade into profit is more better. It means that for that one, the trade is going to close with some profit. Assuming I want to move my stop loss to somewhere here, okay, then it means we are looking at a price of let's look at this price here. This price here, we want to move our stop loss to that price, or let's even use this one. Maybe let's use the immediate one here, which is 0.66960. That is where we want our stop loss to be. So we'll go back 0.66960. Please take note. Then it means we'll come back here. We'll modify this trade. Then we will clear the stop loss over here. Then 0.66968. is going to be our new stop loss. Then we'll click on modify. Now we have moved the stop loss a bit higher. So this is where our stop loss is now lying. This is our new stop loss now. So it means even if this trade should come back against me as it is coming, when it gets to this new stop loss here, it will close the trade automatically out of the market. I'm sure you are getting it. It is as simple as that. So if the trade continues to go up in your favor, you can choose to continue moving the stop loss above. But make sure the intervals between the recent price, where the price is, and then your stop loss is a bit better, so that it doesn't become easy for the stop loss to get hit. Do you get it? That is the only thing that I may say you have to look at. But aside that, the discretion is yours to decide how you want to set your risk free. Take note once again that I said if it is a sell trade, then it means your stop loss must come below the entry price if it is a sell trade. But if it is a buy trade, once the trade moves into profit, then your stop loss will come above the entry price. Mind you, you cannot set a trailing stop or a risk-free trade if the trade is against you. If you are in loss, you cannot set a risk-free trade if your trade is in loss. Please, this is very important. You cannot set a risk-free trade or modify your stop loss to entry or into profit when you are not in profit. I'm sure this makes sense. You can only modify when your trade has moved into profit. That is when, and you feel that profit is a bit huge, and so you want to secure the profit, that part of the profit that has been made. So if you want to secure part of the profit that has been made, then of course you can move your stop loss into entry, or you can move your stop loss to profit or into profit, and then you allow the trade to run. So that is how to set risk-free trades. So once you set up a risk-free trade like this one that is running, once you set up this two risk-free trade like I have done, I can choose to add more trades because the first two trades that are running here are all risk-free. It means if the trade should even come back, it is not going to have any effect on my account. So I can choose to add new trades whilst I still have these ones running. Do you get the scenario? You cannot add more trades when your trades which are already running are not risk-free. It becomes dangerous to add new trades when your already running trades are not risk-free. But once you secure your profit and you put your stop loss at entry, or you move your stop loss into profit, it means the trades that are now running are risk-free. They wouldn't have any effect on your account. So it's just like your account is fresh. There's nothing on your account. That is what it means. So it means you can now add new trades when you see an opportunity, or when you see a new opportunity you can add, because the previous ones that are running are all running at risk-free. Do you get the understanding? So that is it. Do not add new trades when you haven't made the already running trades risk-free. When you do that, you are endangering the account. It means you are putting more pressure on the account, which is a bad habit of trading. So never do that. But you can do that when you realize that the already running trades, you have moved your stop loss into profit, or you have moved your stop loss to entry price, making them risk-free. Then it gives you the opportunity to add new trades when the opportunity comes. Is that okay? I'm sure you have understood this explanation and you will stick to it, and then begin to get your trades at risk-free when the opportunities present themselves as such. Thank you for watching. Subscribe for more videos. We are here to stay and we are here for you. Forever, this is Leading Forex.